studying your last two. I swim with tea when they turned in. The staring out to mute and can lend a pole that some kid died.
When working with corporate owner-managers, compensation planning is much more than deciding how to take money out of a corporation. It's about designing a strategy that is tax-efficient, financially sustainable, and aligned with the owner's personal and long-term financial goals. As you can see on the left, the owner-manager sits at the center of several important financial decisions. Money flows from the corporation to the owner, supports the family, and ultimately helps build a secure retirement. Every compensation decision affects this entire journey. Successful compensation planning balances several important objectives at the same time. We want to minimize taxes legally, but that's only one piece of the puzzle. We also need to ensure the business remains financially healthy, while helping the owner achieve personal goals, such as buying a home, funding education, or planning for retirement. One of the most important ideas to remember is that there is rarely only one correct compensation strategy. Two experienced accountants may recommend completely different approaches for the same client, and both recommendations may be technically correct. That's because every strategy depends on assumptions, priorities, and the client's unique circumstances. At the bottom of the slide, notice the 5 key areas affected by compensation planning. Every decision influences personal taxes, corporate taxes, retirement planning, long-term tax efficiency, and even family finances. These factors are interconnected, so focusing on just one of them can lead to a less effective overall strategy. This is why experienced tax advisors don't simply ask, "How can we pay the least tax this year?" Instead, they ask, "What strategy creates the best financial outcome over the client's entire lifetime?" That mindset is the foundation of effective tax planning and the guiding principle for everything we'll learn throughout this module. As we move beyond the big picture, the next step is learning how experienced tax advisors actually think. One of the biggest misconceptions in tax planning is that there is a single best strategy for every client. In reality, that's rarely the case. Notice the 4 clients shown at the top of the slide. One is a young entrepreneur focused on building wealth. Another is approaching retirement and needs retirement income planning. A third client has very little retirement savings and may benefit from building CPP or RRSP benefits. The fourth is preparing to sell a business, where capital gains planning becomes the priority. Even though all of these clients may own similar businesses, their personal situations are completely different. That's why the same tax rules can lead to very different compensation strategies. This is exactly how professional tax advisors approach every client. Instead of jumping straight to calculations, they begin by asking the right questions. How much income does the client need today? What are their long-term financial goals? Should taxes be deferred into future years? Do they need RRSP room or CPP benefits? And how much flexibility should they have when withdrawing money in retirement? The answers to these questions shape the compensation strategy. There is no universal formula that works for everyone. The illustration on the right highlights another important principle. Great tax planning is about finding the right balance. While saving tax today is important, it should never come at the expense of future financial security. A well-designed strategy considers retirement planning, growing investments, future flexibility, and the client's overall financial well-being. This is why experienced accountants often provide different recommendations for the same client. Each advisor may weigh the client's priorities differently, and multiple approaches can be technically correct. As you study this module, don't focus on memorizing individual strategies. Instead, Develop the habit of analyzing the client's unique circumstances and balancing competing objectives. That professional judgment is what transforms a tax preparer into a trusted tax advisor. Now that we've explored the mindset of a tax advisor, let's look at how you should study the rest of this module. The goal is not to memorize strategies. Instead, it's to develop the ability to think through real client situations and make informed planning decisions. The 4-step learning approach shown at the top of the slide provides a simple framework. First, understand the reasoning behind each strategy. Ask yourself why it works and what tax principle it is based on. Next, analyze the client's situation. A strategy that is ideal for one client may be completely inappropriate for another. The third step is to compare alternatives. Rarely is there only one possible solution. Good tax planning often involves evaluating several options and choosing the one that best aligns with the client's objectives. Finally, think critically. Challenge the examples. Ask questions. And consider whether an even better solution could exist. Developing this habit is what builds professional judgment. As you continue through this module, you'll also begin building your own tax planning toolbox. Each new topic, whether it's salary versus dividends, RRSP planning, CPP, TFAs, holdcos, shareholder loans, bonuses, or retirement planning becomes another tool that you can use when advising clients. The more tools you understand, the more flexible and effective your recommendations will become. The checklist on the right highlights what you should aim to develop throughout this module. Focus on understanding the concepts, learning how different strategies work together, keeping the client's goals at the center of every recommendation, and gradually building the confidence to exercise professional judgment. The key takeaway at the bottom brings everything together. Every client has different financial goals, which means every compensation strategy should also be different. Your job is to understand the client, identify their objectives, select the most appropriate combination of tax strategies, and help them achieve the best possible long-term financial outcome. Remember, tax planning is not about memorizing rules. It is about understanding people, understanding their financial goals, and designing strategies that fit their unique circumstances. As you progress through this course, you'll continue adding new tools to your planning toolbox, allowing you to provide increasingly valuable advice to your future clients.